Welcome back. Well, let's get straight to the discussion on Honasa Consumer. It's up close to around 10%. There was a bit of an intraday dip that's got bought into. Varun Alagh, the chairman at Honasa Consumer, joins us on the show. Varun, good morning and congratulations on a good showing in the past quarter. Well, plenty of evaluations. And at the IPO, you had said that you believe it's fair. And for the time being, that's proving right. The question is, what's the way ahead? Because top-line growth has been good. Though on margins, you have mentioned that there is scope for improvement. So give us a rough number in comparison to what you did in the first half of the year. What kind of margin improvement are we looking at? And add cost as a percentage of your sales, well, that's come down to around 35%. Do you see that number dipping further? If yes, by how much?
Hi, thank you for having me on the show. So from a perspective of the way we have seen the business in the past, and we clearly see that as brands grow in scale, and there are structural efficiencies which come across marketing and the leverage that comes in, because as the brand awareness increases, and the need for similar level marketing decreases, then in percentage it keeps going down. And we've also seen OPEX leverage kicking in. And as we go forward, of course, in the short term, things would be very similar to what they have been in the past. And but from a medium and long term perspective, I think our endeavor would be to keep looking for more opportunities on how, while we continue to grow faster than the market, and how we can find more opportunities of efficiency
Varun,
and leverage. And we'll keep working the same.
Varun, you've said that before as well. You're looking at operating leverage, you're looking at growth, looking at outbeating the industry growth. That's very, very good. We're trying for a couple of quantitative numbers. So in terms of an improvement on the margin front, say by FY25, you don't want to give us for FY24, how do you see that number move? Can you see 100, 200 basis points improvement? And also on the ad spends, it's come down from around 40% to around 35%. And you told us about that as well. Do you see it dipping further? If yes, what will be the ideal number out there? Some quantitative details.
I wish I could give you a quantitative outcome. And of course, like I mentioned, that the objective here onwards would be to get better each year, and while continuing to grow faster than the industry. And like you rightly mentioned, the largest component of that getting better, or that efficiency or leverage that we see happening even in the next year or the next 2 years, will come from the A&P leverage. And we are very confident that will continue to sort of help the company become more efficient.
Varun, hi, good morning. Prashant here. I think the stock market's excited to see you, because as we are in conversation with you, the stock has moved up a few percentage points. It's up 15, 16% now. So that's a very strong reaction to a strong set of numbers. Can you break this down, the result that you've posted, volume growth across brands? Where have you seen the maximum growth? Does it come from new brands, older brands? And what's the outlook? Really?
Honestly, the entire growth is actually volume driven. If you look at our half one, our value and volume growth is both at that 33-34% mark. Across brands, if you look at, of course, Mamaearth is our largest brand and continues to grow very strongly compared to the industry and other large brands out there. But our younger brands have also demonstrated very disruptive growth. The Derma company, which is our second brand, which is just 3.5 years old, is already at a 380 crore ARR. And Aqualogica, which is less than 2 years old, is hit a 180 crore ARR. Dr. Sheth, which we had acquired last year, and we've actually grown the brand 30 times, and that has also entered a 150 crore club. And I think not many companies have been able to demonstrate the ability to scale and build brands at the pace and time that we have demonstrated. And that gives us a lot of confidence on not just being able to scale these brands into much larger outcomes, but being able to do that on more brands as well.
Sure. I think that's what the street likes, 16% higher now. So you're clearly the lucky charm here. But Varun, good morning. By the way, overall your growth rate, just to get that out of the way, has been 33% in the first half of the year. Is this 30% plus growth rate sustainable in the second half as well on the top line?
That's our endeavor.
Okay, got it. So 30% plus growth rate sustainable in the second half of the year as well. Can you tell us from the offline market now, what is your share and what is the target over the next couple of years?
I think that's an area where we're still very young. And it's only been 3.5 years that we've started sort of expanding in offline. And we currently, of course, about 35% of our revenues come from offline. And it is amongst the fastest growing channels for us. And we're there in only about 150,000 stores in the country today. And I think there is a lot more distribution expansion opportunity, lot more that we can do by just going deeper with our modern trade customers, right? And even opening more EBOs. Right? So on all three fronts, we will continue to double down.
Varun, you know, the street also likes the fact, as you mentioned with Dr. Seth, you all bought that business and then I think it's grown 25, 30 times odd. And now it's entered the 150 crore club. So inorganic growth will be interesting because you all have the ability and you'll have proved that. And you're sitting on a good amount of cash as well. So can we hear something on the inorganic growth front in the second half of this fiscal? You're scouting, you've said yes, you're always on the lookout. But can we hear about something? And if yes, what could the potential size be?
So I would say two things. One, priority for us when we see any consumer white space, right, is to still attack it organically by actually crafting our own brands, because we have clearly demonstrated our ability to craft and scale brands. Right? That said, if we come across good brand mixes which we believe we can grow much faster, right, we are going to look at them as well. Right? Ideally, beautiful brand mix, but not too large, right, is a better place to be as we evaluate them.
Varun, one of the risks which there was a analyst note which was published, Jefferies had initiated coverage a few weeks ago. One of the risks they had highlighted is that between 40 and 60% of your revenues over the last 3 years that you've generated have come from brands which sort of you launched in that same year. I mean, so they are from new products, new brands. So which means that you have to continuously innovate and put together new brands and then launch them, push it to the market, etc. How do you respond to that, and how should investors read that?
So let me just correct that understanding. Right? What that referred to was our innovation-led growth. Right? And that's not just about new brands, right? But innovating within our current brands, more importantly, right, is what has led to and has been one of the core drivers of growth. Right? As a company, we very strongly believe that consumer out there is looking for newer, better innovations and evolutions. Right? Companies and brands that are able to serve those needs, right, will actually gain, in the longer term. Right? And we have built a company which has ability to do that. Right? So I think that's our core DNA. We will continue to innovate and provide the right products to our consumers. Right? Even in H1, 13% of our revenues have been delivered through innovations that we have done. Right? So I think that's a continuous core capability of the company, and we'll keep driving that to delight our consumers.
Got it. In fact, I've been a personal user of both Dermaco and Aqualogica, and I must say you all are doing exceptionally well in that space. But these new products, right, currently I think it contributes about 13% in the first half of the year. How much do you see new products contribute to your business over, say, the next 1 year or so?
So the thing with us is that for innovations, every year is a new benchmark in a new year, right? Every year we have to look at consumer trends, what are the consumer needs. We have a lot of data crunching that we do to understand what kind of products would the consumers love, right? And we provide those products to them, right? So it's not just about what we have launched this year and how that will do next year. Of course, that is going to grow, right? But we are already all our teams are working on, going to all the markets in the world as well, studying all the Indian data and consumers, right? To figure out what are the right products to offer them in the next calendar year, which can which can sort of attract their attention. So I think, like I said, it's an absolute ongoing capability for us, right? Which we rely on every year to actually deliver delight to consumers.
All right, Varun, thanks so much for stopping by, and congratulations to you as well as the team on delivery of these results. I've got 2 little babies at home, so you know which products I'm using. But last evening I saw on social media as well, you'll put out a video of the maintaining work-life balance. So good on you. I think employees will be happy. You're happy today, and shareholders are happy as well with what you had to say, because as we speak, the stock is at the high point of the day, up 18%.
So what's the trick to maintain work-life balance?
We'll discuss that off the record.
All right, well, more on that later, coming up with Nigel. Well, 18% higher, you got Honasa flying away and looking very, very strong.